with these technology giants in the hot seat. We know that Google, Amazon, and Apple are facing fines. Bloomberg says the fines could be as high as 10% of their annual revenue if they do not comply with new European Union rules on data usage. The companies will be banned from using any data from business to compete with them or from treating their own services more favorably. And you know, at home, Facebook is facing an antitrust lawsuit from the DOJ. What impact will all of this have, you think, on these big tech stocks where we continue to see money moving into tech?
Yeah, it's a great point, Maria. And you don't need a weatherman to know which way the wind blows. And clearly regulations coming their way and obviously gathering data, their competitive advantages are going to start getting eroded, especially with some regulation. Now, where this can be really, really dangerous is if you look at retail investors specifically, they all own the S&P 500. In fact, we've seen $30 billion go into S&P 500 index funds this year. And the reality of it is it's all driven by big tech. So, I've joked that the S&P has become a tech fund and drag. It's about 40% tech now when you factor Amazon in there as well. So I think the problem here is if you're looking at that reopening of the economy, we've talked a lot about this. I'm very bullish on the reopening of the economy. Buying the S&P 500, because you're buying 500 stocks, you think you're actually participating in that trade, but you're really not, because those big mega cap tech companies are something like 23% of the overall index. And to make matters worse, Tesla is going to be basically sold into this index at the highest price possible when Wall Street basically unloads it on the index come next week, which is going to be like another $80 billion that has to get bought. Basically, Tesla at the highest price you could possibly buy it being put into the index. So I think you have to be really careful as an investor right now. You have to diversify your money. And I see this all the time. And we probably look at maybe 50 portfolios a month. And most retail investors are overweighted in tech stocks and overweighted in the S&P 500. And you've got to really diversify right now if you want to participate in the reopening of the economy.
Yeah, and I think this is a really good point. And in that same vein, when you know where the wind is blowing, would you buy indexes that hold Chinese stocks right now, knowing the executive order that the president is putting down to ensure that the U.S. is not funding the growth of China's military through buying these Chinese companies that are tied to the Chinese Communist Party military?
I'm going to go on a limb here and say yes. I think you have to have a global portfolio right now. I think you can't ignore China with 1.4 billion people, and it's really hard to get around it. I mean, everyone benefits from the fact that we're all selling to China, whether you're in the U.S., you're in Europe, and at the end of the day, their growth rates are faster, even if they're not exactly accurate, as you mentioned earlier. And if you look at valuations...
Everyone benefits. You say everyone benefits except those companies that are getting their data stolen. Microsoft says it costs tens of billions of dollars because 90% of the people in China use the Microsoft operating system and only 1% pay for it. So I don't know that there's a lot of benefit there to the companies that are getting robbed. Let me ask you about the health of the consumer, Dennis, because investors are waiting on the November retail sales report that's due out tomorrow. Economists expect a decrease of 0.3%. This is an important marker for the markets as a gauge of business and consumer health. Dennis, what's your take on retail sales and how it will impact markets?
Well, I think everybody's talking about a small decline. When you're talking about retail sales, I think it might be actually up 1 or 0.2%. But in retail sales, a miss of 1% is reasonable and to be expected. I mean, the numbers can be exaggerated in either direction. I think if you look at my house here, my wife has probably bought a little bit less than last year. Haven't done much as far as mom and pop is buying, but we've obviously picked up the amount of buying that we've done online. So the numbers can be exaggerated in either direction. I think far more important is what's going to happen at the FOMC meeting, which begins today and ends tomorrow. And there will be nothing coming out from the Fed. I think they'll lift exactly what they said last month and put it into this month. There'll be very little change in policy whatsoever.
All right. Thank you for looking at the Fed meeting because it begins today. We'll hear a statement tomorrow. And this is, of course, the last meeting of the year. Let's talk IPOs, yes. Stephen. Airbnb, DoorDash. Take a look at these stocks this morning. Analysts are now downgrading their ratings on both stocks after big public market debuts. Airbnb is down 3% right now. DoorDash down almost 3% as well. Your thoughts?
I've always come on these shows and been a big tech guy. I'm always, tech. I think that's where your innovation is. That's where your growth is. That's where you can make money in the long term. But I got to be honest, in the last few months, I've been running away from it. And it ties into these IPOs that are coming out right now. They're built on hype. And IPOs are always built on hype. That's part of the deal. but they're built on the hype that the pandemic never ends. And it just, there's no substance behind it. I've been telling people the last few months, watch out for these IPOs, especially your new investors, because we both know there's a lot of new investors in the market in the last year or so. Be careful with these. Wait 3 to 6 months. Let the real price shake out on it, then jump in down the road, and then take advantage of the pricing on it. And then to tie into your other guest who was saying on the China thing, I want to make sure we're clear on this. When you're asking them, maybe politically and morally, it's not right to be investing in China stuff. But if you're looking just at the math, and if you're looking just at making returns for your investors that are watching this, there's a lot of opportunities there. And he's right. Everything's tied into there between us and Europe. So it's hard to completely avoid that. That's what the politicians are going to do. Let them fight those battles. But for the investors, if we jump in on some of the China stuff, there's a lot of good opportunities. And then finally, one last thing, and I've never said this on any of these shows before, but if you guys want something different, maybe it's beyond the scope of what we normally talk about, but look at the high yield bond market right now. You can buy some unbelievably cheap bonds out there, like in the airline industry, for people who don't want to go all in on the markets, but want to take a little advantage of it and get some seriously depressed pricings on the bonds. Again, something different than we normally talk about. Look at those right now. There's some really good opportunities for your investors out there.
Yeah. I think you guys make all really, really important points. And don't get me wrong, I get it. I get the global story and the global opportunity of having 1.4 billion people to sell to. But let me ask you this, Stephen. How many years do you think it will take for the Chinese Communist Party to overtake America as the #1 superpower? How many years do you think it'll take? Because that's what the CCP is doing right now. And what do you think that's going to mean for your grandkids? Are they going to have the same opportunities that you had?
Maria, I'm not disagreeing with your logic, and I'm not disagreeing with the moral story that you're saying at all. You're right. We need to do things to eliminate the theft of property and intellectual property that's going on over there. There is no doubt about it. I'm just saying from the investment side, ways of making money there. From the
I understand I understand making money over the near term. Yeah,
you're spot on, and that's what the politicians are doing right now. They're trying to fight those battles, and they should because there's a lot of theft that goes on over there. There's a reason why their economy has jumped.
It's more than theft.
So much.
Well, this is a communist party. This is a communist party, and the world probably wants to think twice about having the Communist Party dominating the world, running the world, being the #1 superpower economically and militarily. Investing in those companies is certainly funding that. Dennis Gartman, Ryan Payne, Stephen Dudash, I loved having you this morning. Thank you so much. We'll be right back.
Thanks, Maria.